everybody buys properties in fixing and flipping with no money out of their pocket? I'm going to give you the answer right now.
If you're just getting into real estate investing, you've probably started to hear a lot about hard money.
Hard money lending. Hard money lenders.
How hard money loans work.
Hard money loan.
Hard money lending.
But what is a hard money loan? How do I go about getting a loan from a hard money lender? It sounds intimidating, but I promise you it's not. I'm here to help. My name is Mike Chadwick. I've been in the hard money lending space for over a decade. And in this video, I'm going to talk about hard money loans and what it's like to go through the process of getting a hard money loan. So a hard money loan is really just a bridge loan. And it's really just a bridge loan from a private lender, an unregulated lender. And that's how I explain it, right? So you have the banks, you have Fannie, Freddie, the GSEs, the government-sponsored entities, and certainly they make loans and they have a ton of regulations. So there's a lot of red tape and there's a lot of paperwork that comes with it, right? So hard money is really an antiquated term. It's really, I would say, more of a stigmatized term, quite honestly, because I think that hard money ends up sort of morphing into, loans for unbankable real estate investors, which just couldn't be further from the truth. Really, they're just bridge loans offered by non-bank lending institutions. And oftentimes these loans can move very quickly. I mean, our loans are approved in a day. We can close on average, I would say, in about 10 days. But the purpose of this loan is to get from A to B. It's a bridge loan. It's certainly there are those old, I would say, those old form of hard money, which is those loans that were made on assets that, I have a house that's worth $100,000 and I need a quick $50,000 loan. Yeah, those programs exist and they will always exist because there's equity there. And you might see interest rates on programs like that as high as 14, 15%. But really, say post-COVID, I would say, and really maybe more really coming out of the financial crisis, the world of building, of flipping has really relied upon hard money loans to fill the gap left by banking institutions, those regulated institutions that, crawl to a close. Those institutions can't facilitate transactions like hard money lenders can, right? I mean, if I can close a loan in 10 days, that allows my borrowers to go out and buy auction properties, to go buy properties like cash. And so, and then I would say that, predominantly these hard money loans, these bridge loans are mostly made for construction. So if you're coming in and you need to do a quick fix and flip, we're perfect for that. We're going to come in. It's certainly the rates are higher in the hard money loans, right? And we'll talk about that more in this video, but we'll also talk about more on my channel. You shouldn't be turned off by high rate. Hard money loan rates might be 10 to 14%, but if you're borrowing at 12% and you're borrowing the money for 4 months, you're really only talking about 4 points of interest plus what you pay at the time of close. So I try to educate my borrowers about how to use hard money and when to use it, and I'd say that that's predominantly going to be in this bridge loan, this value add, this fix and flip. I want to build a new house type of strategy. The BRRRR strategy is perfect for a hard money loan where you can buy, renovate, and then move it ultimately into a DSCR. So there's a lot of different reasons to use hard money, most of which is speed and flexibility. And we'll certainly get more and more into that. But I would say that the focus should be hard money equals bridge loan. Ultimately, as a hard money lender, we're really going to focus on your exit strategy and making sure that you as an investor can execute that strategy. So it becomes all about the borrower's experience in a hard money loan or a bridge loan situation. Their ability to execute is paramount in terms of the credit decision as to whether a loan will be approved or denied. So that's really it. I mean, in terms of what it is, a hard money loan is simply a bridge loan. And I feel like coming out of the financial crisis, it's really filled a gap and allowed investors to grow and build great portfolios. And there's so many success stories that come out of borrowers that are totally bankable, that use hard money and they use it the right way. And that's for the speed. And that's really what it is. It's the speed of money, this hard money business. It's the ability to get loans closed quickly and to move investors through a process that keeps them liquid, not just to close, but through ultimately the funding of the construction project itself and getting out and ultimately that investor either refining into a perm loan or moving into, to sell the property. So that's it for what is a hard money loan. So why would somebody use hard money, and I laugh at this all the time because I think it's just not understanding the numbers. The biggest misconception that I have is that my borrowers aren't bankable. All of them are. I mean, in fact, I would say 95% of my borrowers have 700, 710 plus credit. So in fact, they a lot of the times will use banks to refi out of deals that they'll use me for purchase and renovation financing on. People come to me for speed when it comes to my hard money loans. They want to get in and out of the deals quickly. Hard money loans, rates between 10 and say 14% points, that range. You're going to want to be in and out of the deal quickly. The longer the deal lasts with hard money, the more it just doesn't make sense. And I've seen some really bad scenarios play out just because the deal itself wasn't meant for hard money. So we're really good at fix and flips. We're really good at ground up construction. We're really good at transitional plays that allow borrowers to buy, renovate, reposition, and this strategy is, in terms of pairing with a loan, it doesn't really get better than, a hard money loan. It's fast, it's efficient. And when you look back and you say, how much interest am I really paying? And what's it costing me to borrow from a hard money lender? And you start looking at it, you say, wow, I've been in the deal for 6 months. I'm paying 12%. If that's what you're qualified for, that's a point of interest a month. That's 6 points. Okay. I got maybe higher leverage from my hard money lender that I wouldn't have gotten from a bank, that maybe it would have required me to bring in a partner at 50% of the deal. You got to look at the numbers. And when you start looking at the numbers, that will reveal why people come to me for my hard money loan programs. So how does it work? How do I get a hard money loan? Is it really as simple as you say it is? And I promise you it is. It's fast, it's streamlined and all of that. But let's get into the nitty gritty and kind of go through what it takes to qualify and then go through our streamlined process. And upfront, I'm going to ask you to fill out an application. I'm going to ask for an experience worksheet on you. I'm going to get an idea where your credit is. I don't care exactly where it is. I just want to know that it's above a certain threshold. Usually that's about 660. We can even make exceptions to go lower based on experience. And then I'm going to want to make sure that you have a certain amount of liquidity. And that's basically an amount of money that allows you to execute the strategy. It's just working capital. And we'll get that, into that in another video. But once I collect the information, I'll package it up. We'll do a loan structuring. And then, within 24 hours, you're going to have a full loan approved, a term sheet issued. And at that point, the appraiser's engaged, title's engaged, and we're on our way to a closing, waiting for the appraisal and title to come back, knowing that we're going to close 2 days later. So really, we tend to get through the approval in about 24 to 48 hours. We're going to get your loan into processing and the appraiser engaged and the title engaged all within hours of that approval. And then we're looking for that to be returned back in about 7 days. And then we're, closing 2 days later. So I'm saying we're closing on average in about 10 business days. The approvals work on common sense. We're not taking a deep dive into your personal financial condition. We're lending ultimately to an LLC, which we'll talk about in another video, not you personally. We're going to look to your experience. We're going to look to your credit, mostly as protection for a downside snenario that you'll have the ability to refi if, as an example, your strategy is to sell. We're going to go through what would be a very common sense underwriting in a very efficient manner, much faster than you would expect from a bank. And that allows us to facilitate transactions for real estate investors who are looking to buy opportunistic real estate. They're looking to offer sellers a deal that they can execute on. And we, as hard money lenders, offer our investors, our borrowers, the certainty of execution to close and to close quickly. So when you hear the term hard money, I want you to think less about the stigma, less about the historical context, I guess I would say, and more about the fact that this is opportunistic, this is common sense lending. These are loan programs that are meant to facilitate transactions for real estate investors that I've taken from $0 to $30 million portfolios in literally 5 years. These are loan programs that are meant to scale investor platforms. Once people understand how the economics work, they understand their options, and they start to look deeper into what hard money loan programs can do. They start to look at it for what it is. It's a bridge loan. It's a loan that really unlocks the ability for investors to grow and to build their portfolio. It's exciting for me to, as a lender, watch that play out. And there's a lot of success stories that I've witnessed in my career, and I'm hoping that I'll continue to build a roster of more of those successful borrowers. I'd like to thank Asset-Based Lending for sponsoring the videos. I'm going to continue to make more content, and hopefully I can continue to educate you on the space. Thanks for watching. And as always, please like, subscribe, follow me on socials at Mike Chadwick, JR for Junior. Thanks.